Money the greatest.
Hey B, what's up?
Nothing much. How's it going?
Man, it's all good, man. It's all good, man. I just did some dumb stuff on the charts today.
Oh no. Let's talk, brother. What happened?
I just knew it was sales. I guess I just didn't have enough patience. I just knew it was sales on my pair today. But I also think like maybe I just need to start waking up at my same time. At my earliest, at my same time. Because
Did you wake up later today?
yeah, I did because of the news.
No. Well, yeah, I wouldn't say do that, brother.
You said what?
I wouldn't say do that. So here's the thing, right? Yes, news can disrupt the day or change around the market and all that. Like we know those things. But the thing about trading is we're not here to predict what the market does. We don't even get paid for predictions. We just get paid when we make the right choices that allow us to react to what's happening. At least that's my viewpoint on it. And so what that means is that you should always be at the market or at your charts simply because you don't know what could happen, really. You have no idea. You don't control the market. The market can, you decide to take one moment off and next thing you know, the market can go up. So, but if you're not there and you're not at the market and you're not waiting, that's even worse, because then you might miss something that happens. So like it's the thing about patience, right? You got to have patience. This is the hardest thing. I still struggle with this because there's some days where I just want to just be away from the market altogether because, it sucks. That's why a lot of people, I think, do swing trading because and swing trading is a lot easier. You literally can set your alert and you have to wait maybe a day for it to happen, or you wait hours for it to happen, but you go do other stuff until it comes into your alert, right? But when you do intraday trading like how we do, the thing that you have to remember is that, yeah, you may set an alert on a zone, right? But at the same time, you may end up having that zone invalidated an hour later or 30 minutes later. And you may end up having to then update and find a new zone, So what it means is that you have to, if you're going to do intraday trading, you have to take time to, what's it called? You have to take time to like really just be ready that it could change at any moment. So you don't want to fall. What I'm saying is you don't want to fall out of your routine. So if your routine is I wake up at this time, I look for the market, I wait for it to happen, news or no news, like you're still going to wake up at that same time every day. And you just commit that to being part of your you commit that to being part of your process of what you do.
Yeah. Can I show you my chart?
Yeah, go ahead, brother.
You see it? Okay. It was news today, but my normal time when I regularly wake up at 4, I'm on the charts around like 4:20. So supply and demand has been, gold is actually trending now. It looks it's just like cookie cutter to me, but I just gotta like really believe in myself. So higher high, higher low, we're in an uptrend. But okay, bam, that's it. So 15-minute time frame. I'm like, yeah, it's going up, but it still hasn't broke the new high. So realistically, when I woke up a little bit later, I'm looking for a sale. But
oh, you're taking a sell off at the bank.
Excuse me?
Oh, never mind. Sorry, brother.
Okay, but okay, so if I go So realistically, this is a zone right here. But and you can bring it up there as well. But okay. So I know if I would have woke up early here around 4, this is something I would have took 420. Wouldn't have took that. Breaks this. This is something I would have. Price comes back in here. Would have took something like this. Either that one if I would have missed it, but I know it's another candle coming up. Or this one. I would have took that one, either this one or this one. But just say I took that one. No, they like 15. I would have had my little R today, my 4R. Times is at 520. I would have got out. And I would have got out the market. Would have got out the market, especially if I would have seen this little inside bar right there. I would have got out. But I know because I'm like, this still could be sell. So when I woke up later, this is the trade I end up taking later. Okay, what was I doing earlier? Oh no, I waited to news to pass. What was I looking at?
So wait, the blue is a supply zone, right?
Yeah, supply zone.
What's the yellow is a demand zone?
No, the yellow is a 4-hour demand zone. It's a 4-hour zone.
Why are you taking buys inside of a supply though?
Well, it's because I just know it was. I know it was still trending. It was still trending, and I could have caught it though. Like I know it wasn't ready to sell yet. That's why.
I get it. It seems kind of dangerous.
Yeah, it was just because I just because well, and this one's is just like took a long time to come, like. So this one is just ranging. So I know when price does this after like this DA does this, I know it's like I knew it was going to sell because I just knew it. I just ran this fib and it was already at 61 or 70 and it just started doing all this craziness. I'm like, I didn't have no patience. And what I did was I did a what did I do? I wasn't supposed to take no trade. I took something. So I had something like this on a 5-minute and I just took it in the middle. I wasn't supposed to do that. My patience got me today. I knew I was going to take a sell outside of here, but I know this is a range. So I either take a sell right here or right here. That's how I trade to catch that reversal. So price came up. And bam, this would have been my signal right here to take a trade if I was going to take at least one. Because I know that's the entry signal for me. Because they're playing a range and I would have took that one and maybe I could have got back in down here or up here, or not even took that, wait till it came back up here. And this was kind of like the same trade that happened yesterday that I know Augustine was trying to coach me about, but how I said like how this one, now when this happens, I know. Okay, so I know we're in the supply zone. I know when this happens, I feel like it'll make a new high, but I feel like it's trying to do a change of character. Because this what it did yesterday when he said like I should have took this reversal and I said it's not high probable. and then soon enough it ended up starting, doing a chop, and now it's going into the sell direction.
Yeah, but I mean, look at the market structure there, bro. You want to pick one thing that's going to give you direction. You could use liquidity, you can use market structure, you can use fib, like whatever. I mean, pivot points, whatever you use, just use something. Because if not, you're going to be trying to catch everything, and you're not going to really catch much of a lot. But you have a higher high here, a lower low here, a higher high here, and a lower low here. At this point, you have consolidation. If it's going to go up from here to consolidation, it might likely go down, and then it ends up creating. This is the real move that you want to catch right here. It makes a lower high here, and it makes a lower low. At least now you have two lower lows and a lower high. Now you have what's considered a downtrend. So you could have put your line. You could have put your line like you did like right here. It wicks it. It gives you at least a candle for entry if you use candlesticks, if you use reversal candlesticks, or if you use candlestick confirmations to enter the trade. If not, you could have put a limit order, one of the two. This is the real move. That to me is just not the real move, because that's the consolidation that happens before. And if you study Wyckoff theory, that's what supply and demand is based upon. It goes back to the 1900s. Wyckoff has a schematic. I can't tell you the whole schematic because I never got too in depth with that. But what happens is if you see a move where the price is moving strongly in one direction, you see consolidation, and then you start seeing it move in the other direction. That's where you know that, for instance, the buyers have got off the market and now the sellers are coming in the market because they weren't able to push it higher. Like that's to me what your real move is. But you got to decide what you're going to do for your strategy. If not, you'll try to catch everything, and then you won't be catching much of anything.
Time is 7:57. Is that Wyckoff theory? Is that inside the course?
Yeah, I think it is. Yeah.
Yeah, that's one thing I didn't go over. I need to go over that because that makes true sense. And I also thought I'm like, man, this is liquidity. I know what Rob calls it, build up trend line liquidity. And I just knew this thing was going to shoot down, but it kind of gave me a runner for my money. But
yeah,
I just went too fast. Regardless, I shouldn't even took a trade inside here. And then I end up buying this.
Oh yeah, that's what most people call the manipulation. So
I end up buying this, then I lost. I'm like, all right, I'm done.
Well, some people, I mean, if you look at liquidity, people would say, all right, this took the highs, this took the lows, and then they would get in something like this.
Yeah, but that's something like right here will do. See, it will say this took the low and this took the high, and then it will be there. I think they will start from right here, and this what happened yesterday too. Took the low and took the high, and it just requires more patience. I seen this the whole way. I just seen it. I backtested this before. I've seen this pair do this before, and I just knew. I'm like, oh, all this build up liquidity. I build up liquidity is going to sell, but I guess it just wasn't fast enough for me, or to say I wasn't patient enough.
Yeah, it's probably just more to do with patience, brother. But definitely don't change your wake up time. If you're gonna wake up like at 4, like you said, be there at 4. Just be ready.
Yeah, because most definitely, like I know that it's a supply zone or whatever, but I would have caught this buy because price was moving crazy. I would have caught this little buy and I would have got out. I wouldn't have been thirsty because I know in the supply zone. Because remember, as you say, supply and demand, a supply zone has to go with the market structure as well. So the market structure is telling me buy, and for me, my back is in that 3 minute time frame. It holds a little bit of weight. So I knew I could have caught this.
I'm gonna say it's just like I said in the chat, I'm not an SMC trader. I'm just a price action trader. And you just got to decide whatever you decide. It doesn't matter too much the style of trading. You just have to make. There's 3 things that every trader does, regardless of what strategy or what philosophy you do on. There's a direction, because no matter what you trade, if the market doesn't go in the direction that you are buying or selling, you're not going to make money. So you have to have something that gives you direction. Then you have to know, hey, this is an area where I want to get in the market. Some people call it thousands of different things, but just to keep it simple, it's a point of interest. Whether that be a support and resistance, whether it be a trend line break, whether it be a liquidity wipe, whether it be a fair value gap, whether it be a supply and demand zone, I don't care what it is. Like everybody does this. This is the fundamental thing of your strategy. So you figure that piece out. Then the last thing you need is just a signal that says, all right, when I see this, I enter the trade. Like you just know. Some people that's a limit order. Some people that's a market execution. Some people that's an engulfing candle. Some people that's a pattern like head and shoulders, or some it's a trend line break. Some of it's a liquidity taken in a certain spot. It's a wick. Like everybody has that. But as long as you have those three things, you can succeed in this market. Now, how you put it together, you have to be consistent in, and whatever it is, that's what you choose. So if you choose that supply and demand is how you help interpret direction, then use supply and demand consistently. If it's market structure, then use market structure. So if it's that you look for, consolidation or double top move, and that tells you reversal of direction. Because like for somebody, right, somebody else, this was a double top. And some people enter a double top right here. Some people enter a double top right here. But
Facts.
there's all them strategies. That's why the market has no one way to make money. But you have to have a one way that you interpret the key things that you need to see: direction, point of interest, and entry. So whatever it is, you just stick to it. So
yeah, clearly it's the or M, and it's clearly exactly right here. People that got that. Yeah, I remember you saying before, like when stuff is like this, when wicking is big wicks, like a big move is about to come. Like just wait. And I know stuff like this, like just say if I was contemplating on something right here, this is a range to me. So I need, just because it's a smaller range, everything is the same, like fractal market. So I should not be taking the trade in the middle. If my bias is sales, I should be taking the trade up here. And that's what I should have done, but I'm still thinking about bias. Well, we'll fake out was that 3-minute time frame right here. Bam.
don't get caught up in the smaller picture, bro. It's all about no matter what you do, you always you trade the higher time frames. You don't really trade lower time frames. Lower time frames give you more of an entry signal more than anything. So
yeah. Oh, okay. So you saying okay.
Look, I'll give you, for instance, like, all right, so we're looking here, right? And we're expecting this to be, so if we're going to say structure is our, directional, that we see this. So our expectation is we're getting something like this, right? Now, if you look at what we got on the charts, it did already tap this demand zone. But for some reason, in the area where it has to break, it's not really breaking. We got this reversal. So now I'm seeing, all right, whenever I trade, I'm always thinking, okay, what possibly could be the next candle? There's this guy I saw online on Instagram. I think his name is like Rock FX. And I love the way he put it. He always said, I don't have to know what happens next. I just have to make an educated determination of what the next candle will print. I just take it one candle at a time. So, okay, cool. I'm thinking maybe the 4-hour might print something going downwards, because I'm not really seeing that it's going to break this. I've seen this big rejection right here, and I've seen this small bullish candle is probably going to put another bearish candle. So now we go to the 15-minute time frame, and it's all about having a narrative. So I'll go on the 15-minute time frame. What do I see? Well, I see that, for instance, it took this high, took this low, or if you want to call it liquidity. For me, that's just a lower low. A lower low was developed here. A higher high was developed here. Another higher high was developed here, and another lower low was developed here. So now we have consolidation. So it explains why on the higher time frame we get this bullish candle, and then we got the bearish candle. Because what price ended up doing was going up into the spot and coming back down, right? So at this point, I mean, I don't really know which direction it's going, but just to make an educated guess, if price was having no problem moving upward until it got here, why would it start moving sideways? Because there's a lack of momentum. So everything we do, we have to give some type of reasoning. I know some people say sometimes the market just takes losses and that's all you have to know, but I really feel like the more you know why, it helps you to be able to make reason, because the market's not no random place. It's full of human emotions and full of human psychology. So it has some level of reasoning behind it. But in bears in just easy terms, you're not going to overpay for some Jordan shoes that your boy can get you a discount with from a Foot Locker. You know what I'm saying? Like, it just wouldn't make sense to do that. And the markets kind of work something similar. They're not going to overpay an investment. They're going to buy it when it's a good investment. That's just how it works. So, and that's just how the world works, period. So at least I'm probably going to take at least this and inspect, okay, it's going to make something like this. Now, just paying attention, right? It comes in, fibs are great for seeing pullbacks, but it's moving kind of strong. And then you can see that it slowly comes back and it starts moving sideways. So here, it had no problem moving upwards. But for some reason, when it got to here, just observation, it's not really having the same gusto that it had before. Okay, that's another sign that probably price is going to reverse. Now we go to an even lower time frame. So you can go to your 3-minute time frame. And so that's when you start looking at 3-minute and saying, look, now pay attention, right? I said this part, it had no problem moving upward, right? But look at what it was doing market structure wise. It made a higher high. It made a higher high. I'm just going to put H because I don't feel like writing out. Oh, it made another higher high. It made another higher high. Like, it's continuing to make higher highs. And then here it makes a lower low. And then here it makes a higher high. And then here it makes also another higher high, right? And then here it makes a lower low. So that whole little section I was showing you, it shows that it's slowing down, right? Because now it's going, if they have, I forget which one of this is called, but they have a diagram in Wyckoff that does something like this, and it goes down like that, something like that. And what this is supposed to show is that there's as many buyers as there is sellers. One side can't really overpower the other. They don't, eventually they're agreeing that this is the price, and eventually one side gives up, and that's when we get the move downward. I forget the terms called, because like I said, I don't really know it that well. But I studied diagrams, but I never got into like memorizing how everything looks. I can't show you that on the chart because it doesn't always show up. But I mean, just at least that we know, hey, we're moving sideways at this point. Okay, so if anything, I'm gonna wait for it to show at least this break here that shows intention. It comes back here. It struggles to even break past here. This is a good enough reason to me to go ahead and enter the trade. But you see how that logically just kind of played out, and how every time frame has a relationship to the other. Like I feel like the real power behind the time frames is use it to get a microscopic view behind what happens on another time frame. So, like for instance, just take your highlighter real quick. Yeah, I think it's under that one. Yeah, take the highlighter, and I just want you to circle this portion right here where I had drawn. And then let's go back up to 15-minute. Yeah. So, I mean, when you look at that, it was higher highs, higher lows, higher highs, higher lows, but that was mostly just bullish candles. You see that?
Oh,
so you can,
the 15-minute, yeah.
you can really kind of make sense of what you're going to see on lower time frames. That's why I made that comment to you about what you would see, because it's not really anything magical. It's just when you understand relationships of time frames, you understand, all right, if I see this on a time frame, I already know what I'm expecting to see on another time frame. Or when I see a trend on a smaller time frame, I know what I should probably be getting on a higher time frame. Like, they really work together. You can't forget the two. Does that make sense? So, I mean, this here, let's talk about this part right here. So our little wipeout of consolidation right here looks like price going up and down and up and down. Like, you can literally see that it made what some people consider double top right here. And essentially, from a market structure perspective, that was consolidation on a lower time frame. So all these things really make sense together, but if you use them hand in hand, it really helps. Yeah.
Using what?
If you use them hand in hand, like make sure that they go together, like it'll really make a lot more sense. Hey, Tom. I didn't even see you in there, bud. Sorry about that.
No worries.
Yeah. Does that make sense, P-Money?
That makes perfect sense. So the 15 and 3, right? I don't need to use the 1, right?
I
I'm
mean,
done with the 1.
you could. I mean, one's going to give you the same thing. Like go to the 1 minute real quick. Like between 1 minute and 3 minute, they're so closely aligned that there's not very too much different. Oh, you might want to turn off the what's it called? Change your tool. Change it here, bro. Yeah, change it to that. There you go. So yeah, I mean, you still see like pretty much the same trend, except yeah, it makes this kind of chalk right here. So you don't want to. The thing is about these time frames, though, you don't want to go too far down, because if you go too far down, you're gonna start seeing too many breaks in structure and all that.
Nah, and that's what be messing me up. Like one time, maybe like, I think it was on Monday when price was booming. I'm thinking I'm on a 1 minute time frame. I'm thinking we got a sale going on, and it was not a sale. You go to a higher time frame with just a wick. I'm like, oh my god, I need to get off this 1 minute time. Especially, I always say for my first trade, it has to be from the 3 or the 5. You know what I'm saying? So, and then after that, then I can do the 1 minute. So it just makes me, less losses or whatever.
Mm-hmm.
That's just for me. Yeah, man. I would have caught this in the morning. Then I should have. And now I know, because I'm glad I'm on one pair. I'm studying this thing, because this is what happened yesterday. It did a little break, and then it's like it would sweep the lows, and then it came up and sweep the highs. Especially that I know that it should be sales.
Mm-hmm.
That should be the wick out right there. And that's the entry signal right there too. But right here is definitely entry signal. That's let's say evening star. And I know because price can come up, and then I can make this I can even make this a new zone, new 3 minute zone. It's like I know everything to do after the damn charts.
Well, that's why some people say backtesting is not needed. You just go in there and make mistakes. But I just really feel like if you backtest correctly, you'll practice more and more, because you'll practice more and more, and your execution gets better because you know what to do.
Mm-hmm.
But it's in the moment, can you execute plays? Can you be like Kobe, and in the moment when the game's on the line, you're still going to be able to make the right play and the right decision when the pressure's on and you're down by 3 with 30 seconds left. You know what I'm saying? Like that's the kind of conditions we trade under. Can you do what you know without seeing the chart move 1,000 different ways and go up and down, or see impulsive and say, oh, I'm gonna buy, and just because you do something off of an impulse? Whether can you say, all right, I'm looking for this. When I see this is what I'm looking for. I hit the button. If I don't see it, I don't hit the button. And you see it make a move, and news hits, and next thing you know, the market moves, and you're like, I'm gonna wait, because that's not part of my plan. This is not what I'm looking for. And then when you see the opportune moment, boom, you hit the button, and then you rake in those profits. It's not really magical to make money in trading. It's just that your emotions really, your emotions can misguide you on the things that you need to do. So you're always going to have emotions. They're always going to be there. But the thing is that you have to be able to make wise decisions. That's it. Just make wise decisions.
Is there anything that will make you buy in this situation? That will make you want to buy straight from the 4 hour? We know we hit a 4 hour demand.
No, not that I see. Like what I showed you. So we came into this 4 hour demand, right? Mm-hmm. And price, we came into this 4 hour demand, mm-hmm. And this is the area where price is ultimately struggling to break. Go to the 15 minute now. Mm-hmm. At this point, I wouldn't see nothing on the order flow that tells me to buy. I would be looking just for a sell.
Yeah, and why? What order flow do you see? Can you explain your?
Yeah, it's like I said before, it's in consolidation. Mm-hmm. So that's not really a trend that shows me to buy.
Mm-hmm. And it's because this higher high made a lower low, right? So obviously,
no, because this higher high went to. Oh, sorry, I forget. I can't do that. This higher high went to a lower low, went to this higher high. Oh, hold on a second. I drew that wrong. I'm sorry. higher high, higher low, higher high, lower low, higher high, lower low. So you have two consecutive higher highs. You have two consecutive lower lows. That's consolidation. So if price was really going to make a buy, why is it going up? If anything, now it's in a consolidation. So I'm going to sell over here, maybe buy over here if I'm playing the ping pong, but I don't play ping pong.
Yeah, so this was the trade yesterday. It did the same thing, made a lower low, and then now it came up here, it just swept the low, swept the highs, and bam, came down.
Yeah, but you gotta, like, you see consolidation like that, you have to ask yourself, if the price was going upwards and then it goes into consolidation, why would it do that if the buyers had the most strength? Like, when the market goes up, that means everybody's buying. When the market goes down, that means everybody's selling. When it's consolidating, it means nobody has more than the other, right? They're kind of equal. So you just got to ask yourself these questions. Why would this happen? And it goes back to the question you asked me many times ago. Why? That's the question I always ask. Why would this happen? If I don't know why, I'm definitely not entering the market. If I have a good enough reason for me to get why, then if I take a loss, great. I knew why I took a loss. If I take a win, great. I had a reason for getting a win. But if I get in something that I do not understand what I have a why behind, and I just did it because I did it and I took a loss, well, that's shame on me.
Thanks.
Because you don't have to enter the market. You don't have to trade. I've been comfortable not waiting for the market, because I'm waiting for what I see as my stuff. I haven't seen anything in the market that's made you say, "Oh, I wish I had done something today." If anything, I'm waiting until they stop announcing a new bank that's going to crash every day.
Man, so now Credit Suisse getting a bailout.
Yeah, everybody's getting bailouts around here. We're going to cover the whole financial system with nothing more than promises and IOUs.
It's like the PPP thing, but just with a different name. Just banks only getting it now.
We just basically said in America, we're going to ensure the entire financial system with nothing more than a promise. And it's just like, oh boy, like, yeah. So the market, every time you say the word bank, the market jumps about 3,000 pips.
For real.
I mean, today, First Republic Bank ended up getting $30 billion from Wells Fargo, Citi, JP Morgan, and Bank of America. What does US 30 do? It takes off. I was like, dang, that's the move I wanted all day.
I was a buy today on US 30.
No, I don't think I would have had the exact trade I wanted, but at this point, being a day trader is tough right now for how I'm trading. The only opportunities I've seen have been swing trades. So I could have caught like a 6R swing trade on GBP JPY yesterday. It would have taken me 28 hours to hit my take profit, but hey, it would have worked. But I just don't have that kind of patience. I just know me. I'm not a patient person like that. So
yeah, this was something I practiced on gold. I should have capitalized on this. I should have capitalized on this.
you got it, P Money. All you gotta do is just remember, stick to whatever your plan is. Don't deviate from the plan. Like, it's a cliche, I know. You probably heard me say it many times. You've probably heard the internet say it many times, but it's like I'm really meaning seriously, because like, if it's in your plan, something you do, just do what's in your plan. Don't do what you see. I mean, react to what you see, but don't just do something because you say, "Oh, I see this, I need to go do this." Like, stick to whatever's in your plan, and it's going to guide you, because your plan should help you navigate the areas where it says, "You know what, this is not what I do." So,
got it, man. I end up looking that what were we talking about yesterday about stop loss? What were we talking about yesterday? What were we talking about yesterday? The capital protection thing. So that one, he actually has another software that allows you to do it, but it's like for a trade copier. But it's like, I'm not gonna use the trade copy on that one. It has something called a maximum daily drawdown. So you can,
cool.
Yeah, so you can just turn that on, and you don't have to lose 2% that day or whatever you want to put it to.
Oh, good. Yeah, I bought that thing years ago. I actually never set it up. I don't know why. I was going to use it for a certain thing with the EA, but I never ended up using it. But no. I thought it was cool that it was shut down because we still closed the EA and stuff like that. So.
Yeah, so it's actually like the way I wanted to use it. It's actually he has it under a trade copier.
Mm-hmm.
Yeah.
Cool.
Yeah, that's pretty much it though. I'm gonna get this right. I'm gonna get this right.
You definitely are, man. You definitely are. So, Tom, any questions you have today before we kind of wrap it up?
Liquidity.
No, all good, Brian. Thanks, mate.
Good. All right, guys. Hey, I wish y'all the best in y'all trading. If you have money in regional banks, you might outflow it to these money market securities or other large banks like everybody else is doing. But let us hope that tomorrow nobody says the word that bank is going to crash. And let's hope that next week that the Fed raises interest rates so that we can get back to business as usual and start catching these 20-yard, 30-yard trades.
Right.
But no, in all seriousness, though, like be safe for your trading, guys. Wish y'all the best. This recording will be up on YouTube. Give it about a couple hours, it'll be up. And if y'all have any questions, feel free to ask in Discord, guys. But wish y'all the best. Be safe.
Peace.
Cheers. See ya.
See you later.